What's going on, guys? How are you? How are you doing? This is Shocks, and this is ShocksCapital YouTube channel. Today, I want to show you a strategy that you can use on the M1 trading volatilities or synthetic indices. So what I'm going to show you first is the structure of how it looks like. Then after that, I'm going to show you what you need to do to actually trade this particular pattern. So what you need to do is to understand that when price is moving on the M1, it is moving like this, where you are seeing price going up, going down, going up, going down, and it's leaving what we call liquidity, or what we call these highs and lows. So what you need to do is to understand the highs or the lows in a what, in a particular pattern, right? So once you see price taking out a high like this, a high on the M5 or a high on the M15, you see them on the M1, because they will be what, they will be swing highs on the what, on the M1. So if you see price taking out a high like this, goes up, it would have taken out liquidity, then goes below, breaks another low, right? This is confirmation of a change of what, of trend. Then you are waiting for price to retest an order block or a fair value gap. So this is what you need to be doing. And if you go back here, we'll see that what we are doing is very simple, right? If you go back here, you see that we have this high, and this is on the M1. This particular high was taken out, which was money that was resting on this particular high by this move, a very aggressive move. Then after that, what does price do? Price comes back and what takes what, a low. When that low was taken out in this particular price action, means that price then goes up again. When it goes up, what are you looking for? You're looking for a what? For a fair value gap, or you're looking for an order block. We have an order block there. Price retest that order block. What are you doing as a trader? You are putting your limits at that particular point, and you are trading with your stop loss above the what, above that particular point. And what you are doing is you are going for the what, for the next low as your what, as your take profit, if you are doing that, right? So right now, what is, I just want to explain the price action that is happening now, so that you understand. Then we'll go and look at more examples for you to get exactly what is happening at this particular point, so that you get it fully and you can use it in your trades. And if you have noticed, we are using a very new synthetic broker, or for volatility indices broker, right, that we are using here. And this particular broker that we are using is well trade, and it offers a lot of easy to trade synthetic indices that you will not find on Derif. So if that is something that you want to do, you need to get your account. The links are in the description down below, and you trade with this. You can deposit with crypto, you can deposit with Binance. So this is how we are doing. We have this law right here at the corner of your screen, right there. That is the law. Price breaks through that particular law, and as price goes up, right, it goes up and takes out a what, a high. When price then takes out a high at this particular zone, it means that this is the what, this is the what, this is the confirmation of a change of trend right there. So this is the high that you are looking for. And after that high, what are you seeing? You should see a fair value gap in this what, in this area. That fair value gap is the one that you are now going to trade when price comes back here, and you'll be looking at that. And if you wanted to trade the order block, this is the order block that you're going to look for, and this order block would have taken you price to the what, to the next high. And the next high that you were going to use as your take profit was this particular what, was this particular high, as you can see in this what, in this picture. And after that, after all that is said and done, right, you have a what, you have something happening here, where price is actually taken out liquidity at this particular zone, and price is going down. So if price goes up and breaks this particular low, right, we are looking at that same pattern where price breaks, right, and price goes back to retest a what, a fair value gap or an order block in that area. And you'll be looking at taking this what, taking this all the way down like that. If price does not take out this, we are just going to follow price until we get a point where we are having a high that is taken out as liquidity, a low that is taken out as confirmation, and a retest of an order block or a fair value gap to what, to validate what we are saying. After all that is said and done, let's just look at more examples of this and how we are going to be trading this. You look at this particular point, what are you seeing? You see that price takes out liquidity after this high, right? This is the high. Price takes out liquidity. After that, what are you waiting for? You are waiting for the break of a low, which happened at this particular point, right? This is the break of the low. When that low is taken out, which is the order block that you are looking for, you are looking for something in this zone. And this is the move that you'd have taken. And where is your take profit? Your take profit is going to be here. And remember, this is FX VO 99, right? FX VLO 99, right? This is the volatility index that you can find on what, on World Trade, and the links are in the description down below. Make sure you register, and when you are registering, you have to choose a Syntax account. The Syntax account is the account that is going to what, to enable you to trade this. If you choose a pro account, you are going to be finding have anything to do with what to do with the synthetic indices, right? So this is how you are going to be doing it. Look at this particular zone. We break liquidity here, price goes, and here we take out liquidity above these highs, and you see that we have another high here. That price takes out what, liquidity, very aggressive move to the upside. And when price takes out this low and price comes back to retest the what, the fair value gap in this area, this is the trade that you are going to be what, that you are going to be taking. So you remember that price is fractal. So what you see on the H4 is exactly what price is going to be doing on the what, on the lower time frame. So it means that you are going to be looking at the same things that you are going to be looking for on the H4, but you're doing it on the M1, right? So you're going to be looking at all those. Remember, price takes out liquidity in this area. This is a lot of liquidity. Then you are going to be waiting for a break of a what? A break of a low. Why? Because we are in an uptrend. So if we are in an uptrend, the confirmation is going to be a low and the liquidity is going to be a high, right? After that, what do you wait for? You are waiting for a retest of a what? Of a fair value gap or an order block. So this is the fair value gap that you are looking for. This is the fair value gap, a retest, and the next low is your safest take profit. And this is how you are going to be doing it. So this particular pair that I'm looking at on World Trade, right? This particular pair is going to be giving you a lot of what? A lot of movement, because this is very volatile, more like the V75. So you really want to be testing this out on this pairs. You take out, now we are in a what? We're in a downtrend. So the liquidity now is going to be what? Going to be the sell side liquidity. So price takes out liquidity on the sell side here, as you can see. Then takes out liquidity, goes up, takes out a what? A high. It takes out a high there and retests back to the order block. So this is the order block that we are looking for, and this is the move that you are looking for on a on a lot that is the minimum that you can put here on a 0.01 lot size on what, on World Trade right here. This whole movement would have given you more than 50 bucks, right, on the minimum lot. So you can see the potential that these indices have on what you can do. You look at this. This is a fair value gap, this right there that you can see, and price takes out here and takes out this particular what, you also, you could have taken your trade at this particular order block, or you could have waited for this what, for this very beautiful fair value gap, which included four candlesticks instead of three, right, which was very good right here, and it could have been tapped in at this particular zone, and look at how price would have moved away with you at that particular zone. So what you are waiting for, a break above liquidity, then a break to confirm, then a retest. So this is, if you look at this particular zone, you can clearly see that we might be having something of that sort, and this is liquidity. After that liquidity, we have what? We have what? Price breaking to the upside right here. And what, after price breaks to the upside, what do you have? You have a retest of what? Of all this, which is the what? The order block in this particular zone. So this is how you are going to be looking at it, right? So just to give you in perspective, or just to give you a rundown of everything, you need liquidity, number one. After liquidity, you need an anchor above liquidity. Then you need a confirmation or a change of character break. to the opposite direction. Then after that, you need a retest of either a fair value gap or a retest of a what? Of an order block for you to get a setup. And this is all being done on the what? On the M1. This is all being done on the M1, and you have to understand how you are going to be doing that so that you are not confused on what to do. All right, you are not confused on what to do and how to do it. So this is the kind of strategy that I wanted to show you on the M1, and you can do this on the M1 time frame, and you can actually make a lot of money doing this only on the M1. And remember, we are using World Trade, and these indices you can find them on World Trade, but remember, you can trade this on derivative indices, you can trade this on any indices that is not boom and crash. And if you want boom and crash, they are all here again on the what? On the World Trade, and this is their gain, and this is more like what? This is more like boom, and you can trade this again, right? So that being said and done, I will see you in the next video. Remember to get your account on World Trade. The links are in the description down below. You get your account, you choose Syntax account, and you can trade this on the M1 time frame. I will see you in the next video. I'm Shocks, and I'm out.